Hey everybody, Jay Lagan here. You might know me as The Disruptor over on Twitter. I also oversee a quant model called Capital Navigator. And this video series is all about me using my quant model to show you what I would be looking at as possible investments. Not investment advice, but rather these are the kind of tickers that are looking exciting in the models that we run and look at every day. So today it's going to be special. There's a lot of talk on FinTwit about energy, gasoline, Natty gas, lots of stuff we want to jump into. I will let you know this is just a teaser for a much more in-depth video that I'll be doing with Justin Spitz Trade over on his YouTube channel. That's going to be awesome. Really excited about doing that with him. We're going to be looking much more under the hood in the energy sector. But let's jump into this. Let's see what we got, okay? So let's get started. All right, the first thing we want to jump into is energy on some equal weight basis, because if we talk about energy and people are saying energy is jumping out, we need to make sure, is it everybody or is it just a few people, a few trades, a few companies? And when I look at this, what I see is something really promising, but something that's not there just yet. So this is S&P 500. It's equal weight energy, so that means like all the market cap people, all the big guns, they're not heavily weighted here. Instead, everyone's equally weighted. And so we can look at this and say, yeah, the sector hasn't broken out yet, but it lets us know something's really coming up. You'll notice a lot of times in my charts, I use what's called a 1, 2, 3 pattern. And so that's going to be that downward trend line, the dashed line you see there. And then what I'm looking for is it to find support or a higher low ideally. And then I want to break out above that previous high. And what we're doing here, we're sitting exactly at resistance of that previous high. So this is where things could go wrong. Definitely not where I would want to jump into the trade. I want to see something where I think there's a higher probability that this is going to work in my benefit. So this isn't the trade for me. And I probably wouldn't invest in an equally weighted energy ETF to begin with, but it does let me know that I'm going to have to be more specific. So if I am more specific, what am I being more specific about? The thing that jumps out to me is whether you're looking at XOP or this ETF here, PXE, it's exploration and production. Now, the reason why this one's interesting is it has broken out. It went above that previous high. So that's exciting. And this just happened this week. So these are fresh trade ideas, nothing to feel late on. But what it does tell me, because this is largely small cap, about 36% small cap, and I want to say about 20-some-odd%, maybe more of mid caps. So for me, it's letting me know that these aren't necessarily the big dogs, right? So this one's more speculative, a little more risk on. Maybe this one could be a nice runner. It definitely had a nice leg up in that previous run. Now, if you're wondering about stocks versus ETFs, I do primarily only look at ETFs. I like that, like if some CEO does something really crazy, it doesn't mess up my trade necessarily, but also I'm much more into the sector macro kind of side of it. I want to see what's moving in general or in trends, and then you can then dive in and look at individual companies in that area. All right, well, cheers. Let's move on. So the next thing I want to talk about is the one I've been just pounding the table on, and that's gas, UGA gasoline. If there's any effort to control inflation, this has to stay down. And guess what? It didn't. It broke above the previous high. And it looks like it could keep ratcheting up, which means you're going to feel it at the pump. And if you're invested in it, you might be feeling it in your portfolio. This chart right here is really exciting. This is the kind of thing Justin Spitz and I are going to be diving into on his YouTube channel. Really excited about that conversation. Looking forward to it. But this one right here, I think gasoline, if I was going to look at a commodity trade in the energy space, it wouldn't be oil. And you'll find out soon it's not natty gas. I think it's gasoline. I think that's the commodity that I'd be trading here. Meanwhile, if I look at natural gas, you look at FCG, this one has just broken out, right? It just completed that 1, 2, 3 reversal pattern. The thing is, this isn't the commodity. These are the companies that produce it. So in the same way we saw the production companies for oil and energy, now we're seeing it here with FCG, natty gas. Now, I got to tell you, if this is breaking out, I'm excited to see what happens with the commodity as well. And we can jump over to UNG. UNG and UGA are from the same family. They're ProShares ETFs. So it's good to compare them. USO is the ProShare for oil. So here we have UNG, natural gas. And you can see here it did break the downtrend. It did find support. You can see how it went lower and then kind of found something there to hang on to. And we're all waiting to see if it breaks above that previous high where that dash is with the price. These are all looking really good. The thing is that they're just not there yet for most of the occasions except for PXE and UGA. Those are the trades that I'm excited about. So that's oil, exploration, production, and gasoline. Hey, cheers, y'all. Thanks for being with me, and we'll start doing these more often. Take care. Bye.